Thank you, Steve. Can everybody hear okay? That's assuming you want to hear. I read my bio that was in this little booklet, and I have to talk to the people who wrote the bio because they left a lot of the stuff out. Like most people, maybe in this room, I get up every morning and dutifully turn on CNBC or Bloomberg or one of these other idiot shows and immediately get my first pump of the day. So I'm going to try and do 6 things. Number 1, I'm going to tell you who I am, so hopefully that will encourage you to listen. Number 2, I'll give you a quick overview. Number 3, and most importantly, I'd like to talk about the current environment of volatility and change. Number 4, discuss the current problems in the macro environment. Finishing up with the obligatory future and predictions, assuming you want to hear predictions. So I started in the business a long time ago. I spent the first 64 to 80 looking for the meaning of life, making a few bucks, and in 1980, I went to New York and I started a money management business. And I decided, I guess I was around 40 then, I said, I got to make some money. So I started a money management business at a firm called Integrated Resources, which was a bunch of independent salespeople. We had about 6,000, and we built a business from 0 to $1 billion. And my parent company went bankrupt because we sold tax shelters. And we had the Tax Fairness Act in 1986, so that put us under. And we sold it to Eli Broad for $100 million, and Eli sold it 10 years later to Hank Greenberg at AIG for $12 billion. I then went to work for Sandy Weil and did whatever he told me to do because he gave me a hedge fund arrangement managing the in-house money. And I trained his kid, who was kind of a jerk but great looking kid, looked like JFK Jr. And I left there in '98 because I had kids late in life with the same woman of 30 years. And I said, I ought to sort of be around these kids, or as Woody Allen is famous for saying, 90% of the deal is showing up. So I decided I would show up. So I walked into Sandy's office and said, I'm leaving. He said, no, you're not. Nobody leaves here unless I tell him. And I said, well, then I'll be the first. And he said, what are you going to do? And I said, well, I'm going to try and make sure my kids do okay. And number 2, I'm going to, mess around with my own money, Sandy, which you made for me, so you might have an interest in that. And he said, how much are you putting up? And I said, $25 million. And he said, okay, I'll give you 25. I said, who asked you? And he said, you don't want it, don't take it. I said, wait a minute, let me correct that, done. Then I called Sam Zell, little short guy who gets very tall when he stands on his money, told him what I was doing. He said, okay, I'll give you 25. And then I called my oldest friend, a guy named Mike Bloomberg, who's now become famous. He's the mayor of New York, and more importantly, he gives away $500 million a year and is worth $50 billion and is the Bloomberg terminal. And he said, I'll give you $25 million. Not because you're any good, but because I know you won't steal the money. I said, well, at least you got half of it right. You can decide which half after the talk. Along the way, I come from the Midwest, obviously, from the University of Missouri. I had the 3 requirements to go to school there. I lived in the state. I had no money, and I had horrendous grades in high school because I had 4 jobs. And I was reading about this guy, Warren Buffett. Warren Buffett. Everybody loves Warren Buffett. So in 1996, I had met him in '86, and I went to see him, and I said, hey, Warren, I want to start a course in the Warren Buffett principles of investing. And he said, how much money do you want? I said, no, let me tell you about the course. And he said, how much money do you want? And after the 10th time, I said, Warren, if I wanted your money, A, I would ask you for it, and B, I think I could get it. I don't want your money. I want your name. He said, why? And I said, well, Warren, there are actually people in the world who think you know what you're doing, and if you put your name on this course, I won't tell them the truth. So he agreed, and it was the Buffett Eisen entrepreneurial scholars. We also threw in about 30 scholarships. And we started the course in the Warren Buffett Principles of Investing. Warren is a fascinating guy. I'm going to be around here for a couple of days. For any of you who want the inside scoop on Warren Buffett, I can assure you I can give you colorful stories. I will just tell you in passing, he is not what you think he is. He does go to the bathroom daily. He does pull his pants on one leg at a time, and he absolutely loves and adores any kind of woman that meets his criteria, which, as I say to him laughingly, is usually vertical and breathing. Or maybe it's not vertical. So, the overview. Oh, I better tell you the overview. In 1980, 1% of the US population had 9% of the money. Today they have 35%. Thank God I am on that right side of the trade. Do not be on the wrong side of the trade. Unemployment, 8%. Baloney. Unemployment is somewhere between 15 and 20%. You have something called underemployment. So basically, 1 out of 5 people in the country don't have a job or a job they like. 50 million people are on food stamps. Middle class income, as you know from the newspaper, has been declining. Stock market's at a new high. Oh wait, how could that be? Stock market at a new high. What's the fastest growing segment of the US population? Well, for those of you that weren't around in 1964, it is us that were. We're called baby boomers. And every day, including today, 10,000 US citizens will turn 65. In the next 20 years, 40 million people will turn 65. So my first investment tip of the day is buy dog food company stocks, because these people have no money. So what did the Fed decide to do? Well, the Fed decided to help them out. So the Fed said, we're going to grow the economy. And therefore, they lowered interest rates. Is that chart up here? You see this? You see this chart? If you leave this conference, the most important thing from my point of view is that you remember this chart. How many people in this room were in the business in 1981? Just roughly. Anybody? 1. Yeah, okay, a handful. So you're all babies. In 1981, Buffett and I were buying United States government bonds, 5-year bonds at 15.75%. They went down every day. He was laughing, I was crying. What was the difference in the emotion? I was on margin, and I was writing checks, the likes of which you cannot imagine. I said, Warren. He said, Harvey, it can't continue. So what happened was, there was a guy then, a famous economist, who said interest rates that were 19% in the short run, because we were doing T-bill rolls or CD rolls to shelter our taxes, had to go to 25%. So now, when you look up, you can look at something interesting. You don't have to look at the speaker, you can look at this, because you have had the most unique thing in the history of finance. You've had a 30-year bull market in bonds, going from roughly the highest rate they ever were to now, for sure, the lowest rate they've ever been. So when I started this business, I was a stock guy, and the first thing I did was I put a quarter of every portfolio into 5-year government securities. The phones were ringing off the hooks. The obscenities that were screamed into the phone by the clients, you could hear without a phone. What is wrong with you? You're a stock guy. Why are you doing this? My retort was, what is wrong with you? The United States government will double your money in 5 years, risk-free. The average return in the history of stocks is about 7, maybe 8%. Which trade should you make? Which trade should I make? And they were still PO'd. Mind-boggling. Never had anything like it. So when people tell you today how bad it is, this is nothing. Nothing compared to what was going on then. You remember gas? I mean, you're not old enough. We had gas lines where you had to wait in line for 4 and 5 hours. Then it was odd and even license plates and all this nonsense. The bottom line is the problems today are not new, they're not original, they're not the end of the world. Let's see, what are they? Well, it used to be that Europe was going to disappear. Europe's a third of the world's economy. A third of the world's economy. Europe is not disappearing. The U.S. is completing the 4th year of their recovery from their financial collapse. Europe is now at about 1.5 years, and it's bottoming as we speak, in my opinion. The next one to go, assuming it occurs, is China, because China is now in the same position that the U.S. was in 4 years ago, that Europe was in about 2 years ago. Now, maybe they can figure it out, but the people that know something about China, I do know something about China because I can order from a Chinese menu. That is the extent of my knowledge about China. Chinese market has been in a gigantic bear market, and in my view will continue. The economy is slowing. They have all kinds of problems. So, volatility and change. Today there is the greatest apathy that I've ever seen in as long as I've been in the business with regard to investing money. People are absolutely terrified. I'm sure this comes as a shock to you because all of your clients are not. They are frozen in deep paralysis. They have no idea what to do. They're terrified to buy stocks because of the 08 50% crash. And they love bonds even though they're guaranteed to lose money. Guaranteed. I can almost guarantee it. No, I think I can guarantee it. But the previous speaker was right. You get your money back. So why don't you all just take all the money you have and send it to me, preferably in 10s and 20s, crumpled in small brown bags. I'll give you an address. And I will take care of it, and I will give it back to you in 10 years. That's the latest hustle. So the government has decided to turn the economy. They're using Keynesian economics. That's a big word. There was this individual in the 30s named John Maynard Keynes who came up with the idea that in order to fix the problem, you had to do something different. And he went into something called deficit spending. That's when we were on the gold standard. Anyway, it worked, not because he was right, but because World War II came along. And World War II got us out of the Depression. So here's something that is a fact. And today, every day in the paper, on television, on all your computer sites, you hear facts from our politicians, particularly our candidates for presidents. And now everybody's figured out that they're liars. Shocking. Well, here's a fact that's not a lie. There have been 3 times in the last 50 years where stock yields have dramatically exceeded bond yields. It was 1953, which none of you even have the comprehension of thinking about. 1978, which some of you will remember, and today. Each time this has happened, there have been multiple years, not days, weeks, or months, years of huge stock market gains. There was an 18-year bull market after the 53. There was an 18 bull market after the 82 bottom. Oh, you remember? Oh, no, I forgot how old you are. There was a Business Week cover in 1979 called The Death of Equities. And everybody now talks about that. The only problem is they were right for 3 years, and the Dow went to 775. It was 1,000 in 1966, sort of when I got into the business. That went to 14,000. So what I'm telling you is this may not happen again, but that's a fact that you can put in your back pocket. When you tell your clients that you want them to buy stocks, you're not asking them to take a suicide pill. You're actually doing something that historically makes a lot of sense. So, the Fed has taken rates down. Bernanke told you he's going to keep rates down. He has no idea, by the way, that he can keep rates down. He has taken the money supply, which if you're tired, you could call me later. I have an 800 line and listen to my explanation, and I can assure you, you will go to sleep. But just let me take you to the punchline. The federal deficit is out of control. The money supply is out of control. And it always ends the same way. Always. The only question is when. The ending comes with inflation. Not deflation, inflation. So that will happen again. And that's why gold is at 17 or 1800, and that's why commodities are going up, and that's why real estate, sort of quietly, is now beginning to recover. High-end real estate is not recovering, it is vertical. My friend Marshall Geller tells me that all the fancy stuff in Los Angeles is in high demand. I can tell you in New York, it's in high demand. So all of this stuff you hear about housing is now over. Housing is one of the biggest employers of people. So you're going to begin to see a decline in the unemployment rate. That's the good news. The bad news is they're crummy jobs. Autos, which are a huge employer, have bottomed. I think they bottomed at 9 million sales in a year. They're going to be 14 or 15 million this year, going to 16 or 17 million. So here's the second investment tip. If housing has bottomed and is rising, buy stocks of companies that make pickup trucks. And you say, why? Because all these people who are out of work need a pickup truck when they go back to work. So you can buy some Ford Motor or some General Motors. But that's happening as we speak. So the world is going to look better. Bonds. See that chart of bonds? You cannot allow your clients to have long-term bonds. I know the guy before me said you should ladder them, and I know he gave you all that bond stuff. I am telling you, pleading with you, get them to lower their duration. That's all you want to do. If you can't get them to buy stocks, get them to get rid of, and they all have a profit because rates are at a record low. Get them to sell their long-dated bonds. They won't want to do it. U.S. public ownership of stocks is roughly at 35%, which is about as low as it's ever been. In pension plans and profit-sharing plans, U.S. ownership or ownership of U.S. stocks is also about 35%, which is the lowest it's ever been. I sit on 2 endowment boards, the University of Missouri, which has $4 or $5 billion, and Johns Hopkins, where I'm a trustee. By the way, I'm a trustee at Hopkins, not because my kids went to school there. I'm terrified of getting good medical care in my old age, and I can get good medical care at Hopkins. So if you want to take another thing away from this speech, we can help you there. But the bottom line is, we sit in these investment meetings, and I lay out this case, and they look at me and they say, are you done yet? Because when you're done, we're buying more bonds. Now, what is the assumed rate of return in pension plans? Well, you all know the answer to this, right? 7 or 8%? Yes? Yes. I'll take it as a yes. It can't happen. It's almost mathematically impossible. And if you keep putting money in bonds, it is mathematically impossible. So something's got to give. And in my view, what's going to give is the election. So who's going to win the election? Anybody know? Anybody think they know? Well, that's good, because you don't know, and I don't know, and no one else knows. But here's another factoid which you can take away from this meeting. In presidential election years, if the stock market rises in August, September, and October, in other words, in English, if the market's higher at the end of October than it was on August 1, the president wins. That's a fact. Now, it may not happen this time, but that's a fact. If you look at the media, they tell you it's a very close race. If you look at the betting polls, they tell you Obama's ahead by 15 points. Now, what's the other thing? In my view, it's more important. It's the Congress. And the smart money there says that the Republicans are going to keep the House. Whether you're Democrat or Republican is irrelevant. They're both scumbags. I mean, they are both disgusting. And the Senate, that moron from Missouri, that idiot, lost the Senate for the Republicans by opening his big mouth about abortion. I mean, what are these people in the Middle Ages? Women don't have the right to choose? What? You can't make this stuff up. So what we have is gridlock and more gridlock. Oh, wait a minute. That brings me to the next crisis. Now the biggie, the new big crisis. Europe has been saved. The election is going to happen. One of these two bird brains is going to win. Fiscal cliff. Anybody heard anything about the fiscal cliff? That comes at the end of the year. We're going to have this depression unless they do something about the fiscal cliff. Well, I don't know what they're going to do, but I'll tell you one thing they're not going to do. They are not going to let that happen. So they are going to, you know what they say 87 times an hour on television, they're going to kick the can down the road. Trust me. Maybe they won't. Maybe we will have a depression. Maybe we'll have riots in the streets. I don't know. The teachers in Chicago are striking. That's sort of an interesting thing. The bottom line is the major points of worry are being dealt with. 2 are gone, 2 remain. 2 that remain are the election, and we know somebody will win. And we know, if you accept what I told you are facts, that standing here today knowing nothing else, the president's probably going to win. And then we're all going to focus on the fiscal cliff. Oh, and by the way, Q3 is coming to an end. Q3, for those of you that don't know, is the third quarter. And we're going to get corporate earnings. And for the first time in 9 quarters, aggregate corporate earnings are going to decline. You can tell people you heard it in a talk. The question is, are stocks really cheap at 13 times earnings? Yeah, the average is 15 or 16 times. However, earnings are going to flatten and start to go down as an overall statement. Now, I'm sure most of you heard yesterday that the new iPhone is probably going to account for 1/3 to 1/2 of 1% of US GDP growth. You can't make this stuff up. And if you think I can make it up, as Yogi Berra says, you can check it. Go online. So we're going to be saved by Bernanke and Apple. Bernanke and Apple. People ask me what the market's going to do. I say, excuse me, you mean what is Apple going to do? Because everyone owns Apple. Now, here's another factoid. Apple has a market cap approaching $700 million? In the history of this country, there have been 6 companies, public companies, that have managed to get a market cap of $500 million. That's 5, or was it 6? Well, it's one of the 2. Everyone today is below 500 million. Maybe that's an Apple phone. Apple is approaching 700 million. Apple had a trial in Silicon Valley against Samsung. And they picked a jury from Silicon Valley. Guess who won the trial? So then they had a trial in Japan. And guess who won the trial? But the bottom line is that there's never been a phenomena like Apple. Apple, your iPhone that you have was created, I think, 5 years ago. I think. When you have a break, look at what people do in this room. When you walk on the street, look at what did people do before the iPhone? I mean, everybody is doing what we used to call the BlackBerry prayer. Now, BlackBerry, which was going to dominate the world, is toast. 10 years ago, there was a computer company called Microsoft that was going to dominate the world. So when I see Buffett and Gates is there, I always turn to Bill and I say, "Hey, Bill, how you doing?" He says, "Hey, I'm great, Harvey." I say, "How's that phone working for you, Bill?" And steam comes out of his ears. Steam comes out of his ears. Jobs, who we had on this television show I was on Wall Street Week, was a guest. We're sitting in the green room, and the lady comes in and says, "Mr. Jobs, it's time for your makeup." And he said, "I don't do makeup." And I said, "Steve, look at me. Listen carefully, Steve. 2 words. Richard Nixon." He immediately, swear to God, jumped out of his chair and said, "I'm ready to go." So this guy had an up and down career, got his ass kicked, had a suit come in from Pepsi and throw him out of the company. How would you like to go down in history as the guy who fired Steve Jobs? Anyway, Jobs came back with a vengeance, and the rest is history. So now we have this phenomena. And this technology is a big, big deal. Because what you have done is you started out the world with farms. Please say, "Tell me that." And then you had the industrial age. Railroads and cars, Edison's light bulb, and telephones, all kinds of stuff. Now you're in the technology information age. And this is humongous. So, when people ask you, "How is the market doing?" if you want to surprise them, tell them what NASDAQ is doing. Because I can assure you, we've done the studies. NASDAQ is the lead indicator of the equity market, not the Dow and not the S&P. So you have Apple, you have Google, you have Amazon, which, by the way, never makes any money, which is fascinating. But this guy has convinced the investing public that that's okay. So his stock's 255, doesn't make a dime. Does not make a dime. Then, the ultimate of all climaxes, some of you know what that is because you're younger people, was Facebook. You couldn't make it up. Facebook. Oh my God, what can I sell a kidney? Can I do something to get Facebook? No, they were selling kidneys for iPhones. So Facebook comes out, it goes up, and then it goes down. And then it goes down some more. Marshall told me last night he's buying the stock. That's inside information. Do not tell anybody you heard that in this talk. Of course, if you know Marshall like I know Marshall, it's not inside information. It won't do you any good. But anyway, Facebook is now cut in half. Everybody, if you're vertical and P standing up, is doing that. If you're not, you do it sitting down. I mean, it's really not a complicated process, but nobody likes Facebook. How many billions of people are on Facebook? How much money would they make if they said, send me $1? So Facebook is probably worth a look. Current problems, well, we've covered that. Current outlook. Ha! Prediction time. You know, like those guys on ESPN? You know how good they are? I mean, think about it. If you flip a coin, you beat them. It's like a friend of mine, it's the old joke, you know, a guy used to bet football all the time and calls his bookie and makes all these bets and blah, 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 and loses his money and calls the bookie up and says, oh, you know, I want to bet the games. And the bookie says, well, I can't take any bets because there may be a strike. He said, but I can take other sports. And the guy says, but I don't know anything about other sports. Think about it. If you take the population of the United States, everybody, and start flipping coins, the people who have 10 consecutive heads or tails will stay in the contest. After the 5th or 6th round, there will be 25 people left. Those people will be interviewed on television. They will describe with great authority the technique that allows them to position their thumb to flip these, in other words, bullshit, okay? Like most of the stuff you hear in this business. So the bottom line is, I got to give you some predictions. The bond market, the only thing I can tell you about the bond market is rates are going up. That I can guarantee. The only thing I can't tell you is when. Buffett can't tell you. Ben Bernanke can't tell you. All of this little squiggle at the end is Ben Bernanke. To get Obama reelected so Bernanke can keep his job. This is really complicated. Trust me on this. So he is now increasing, once again, the money supply. QE 47.5. It doesn't do any good, but it doesn't matter. It is laying the groundwork for massive inflation. So that's the bond market. Please, please, please cut your maturities. The stock market. Standard & Poor's puts out something called the Dividend Aristocrats. It's 30 or 40 high-quality companies. High quality being defined as everybody in this room knows what they do, what their business is when they look at the name. They've raised their dividends every year for 20 consecutive years. Now, I'm on a couple of boards of directors. When you've raised the dividend for 20 years, you ain't cutting the dividend, okay? That's an opinion, but I'm telling you, you're not cutting the dividend. So this is really very complicated, so listen closely. You take these S&P 30 or 40 companies, and you buy equal amounts of each. And the average yield on that is going to be somewhere around 2.5 or 3%. Then what you do is you screen them for dividend growth over the last 5 years. So start with 15% because in 5 years, 15% doubles. And all that means in English is if you buy something at 3% today, in 5 years it'll yield 6%. That cannot happen in a bond. Cannot happen in a bond. Then you have to look at the balance sheet, which is, I know, a test for some of you. And then you have to look at the cash flow and the coverage to make sure they can pay the dividend. But the bottom line, there is a no-brainer giveaway free lunch in the stock market today, where you can buy Microsoft, Johnson & Johnson, IBM, all kinds of crap that's high quality. Cisco, Kellogg, you can buy these things. They're very boring. And your clients can sleep at night. And guess what? In 5 years, they won't have 3%. They will have 6%. Now, there's this dirty little secret you shouldn't tell your clients. They can do this at Vanguard for 10 basis points, but we try and keep that quiet. So, Europe, the worst is over. Here's how you remember it. In 1914, there was World War I. Germans lost. 1940, there was World War II. Germans lost. Now, 2012, the Germans won World War III without firing a shot. They now control Europe, which is what they always wanted to do. These guys, who are really smart, finally figured it out. Europe is going to be fine. The fiscal cliff, if I had $1 for every time they're going to say fiscal cliff in the next 3 months, I'd have a lot of dollars. Probably fill this room. It will not be a disaster. So, the conclusion of my talk is that bonds are overpriced. It's the next great bubble. Because when it turns, who's going to buy this stuff? Stocks are reasonably priced. And you can buy high-quality companies and not worry. Now, will the price of the stock fluctuate? That's a bit of a problem. But at least it's something that you can honestly suggest to people for a portion of their money. Then finally, there's just the same old-fashioned stock picking. So in 2001, I think it was 2001 or 2, Marshall Geller and I got involved in a $3 stock called GP Strategies on the New York Stock Exchange. And it was a mess. Today, that stock is not 3. The stock is 20. We spun off 2 divisions, which makes the 325. But it was a struggle, and it took 10, 11 years. So this long-term thing that you always hear about, really important. Watching the market on a daily basis, really stupid. Watching these idiots on television, unless you enjoy the entertainment value, no value. So I think we are today in the greatest opportunity that I've seen since I've been in the business for people like you. Because when Wall Street got their pants pulled down in 2008, there was nothing there. You remember the movie The Wizard of Oz? And they pull the curtain back and there's this little guy behind there pushing all these levers. Wall Street has been a sham forever. Now people have figured it out. So Vanguard and no-load funds and all kinds of things have come into practice. This is the greatest opportunity for the independent financial advisor that I've ever seen. Because all your individual clients use 3 professionals. They all use a doctor when they're sick. They all use a lawyer when they're getting divorced for the 4th time to marry the next one, which is like the 4th one. But anyway, and they use an accountant to do their taxes. But when it comes to investing, they know better. And all you have to do is look at their tax return to understand how well they've done. So the world has changed. Most rapid growth is over 65. There is no income to be had. The cardinal rule of investing is to measure everything against the riskless rate of return, which today, for all intensive purposes, is zero. If you buy bonds, you're guaranteed to lose money, and everybody will continue to buy bonds. But that will change. Question is when. So, I will wind up by shamelessly, as my friend Jim Cramer says, promoting my own stock. So I'll give it to you in 60 seconds. We have this company that trades over the counter called National Patent Development, which came out of that company I told you about. The stock is $2.50. There are 17.5 million shares outstanding. There's about $1.70 a share in cash, and there's no debt. And the company announced that they've just made their first acquisition, which is in money management, something we delude ourselves that we know something about. The ownership of National Patent is interesting. Of the 17.5 million shares, I own 6 million shares. So I'm in the deal for 18 to 20 million bucks. The next guy is a guy named Mario Gabelli, who's a fund manager. He owns 2 million shares, maybe 3. The next guy is a guy named Phil Frost. Phil is the chairman of Teva. Teva is the largest generic drug company in the world, has a market cap of $40 billion. I think he owns 2 million shares. The next guy is Buffett's nephew, who went into the money management business, too small for Buffett. So he owns 1.5 million shares. And then I have 4 or 5 friends that in total own another 4 million shares. So if you add it all up, it comes to about 16.5 million shares. So there's 1 million shares that's outstanding. And the people that I know that own the stock, they tell me they're not selling it. But as I said at the beginning of the talk, everyone lies, so I assume they will. But the point is that we took a stock 10 years ago from 3 to 25. That's the goal now. Why am I doing it at this exalted age? For those of you that are married, you will understand the following comment. I cannot stay at home. I can't do it. To make matters worse, my young kids that I told you that you've all but forgotten about are now in their 20s, and you have not had anything until you've dealt with the problems of young women in their early 20s. So I got to get out of the house. So I got this guy, Carl Icahn's old office, and it's 10 minutes from my house. It's an hour north of New York City. So the message is, the world is not ending. Nothing is new. In fact, if you agree with me to any degree, just look at this chart. This has never happened in the history of the world. Interest rates have never been this low in the United States. This has to change. It will change, but we don't know when. Stocks are fine. How under this guy Obama? And how under 9-10% unemployment and less than 2% GDP growth does the stock market double in the 4 years this bum has been in office? You cannot make this stuff up. Now, to be fair to him, Romney, in my view, is equally unattractive. So I am not making a political statement. But the stock market is at a new high for the last 5 years. Maybe Apple had something to do with it. Maybe, a little bit. So Wall Street has been finally totally discredited. Big takeaway. What you guys do, by the way, I call men and women boys and girls guys because I have girls. So there's no, I make a lot of sexist remarks, just like my friend Bloomberg, but this is not one of them. What you do is going to be a huge, huge growth business. If you have older clients, try and take care of them. Oh, and my final pitch on our little company, National Patent Development. We have 4 businesses. We have mutual funds, which you probably have heard of. We have individually managed accounts, stocks and bonds, which you've heard of. We have institutional accounts, which you, I'm sure, have heard of. But then we have something you may not be too familiar with. We are the second largest money manager for small regional banks who outsource their money management. So we are a CIO in a box. There are about 7,000 of these little banks around. So I will leave you with the idea that if you're interested in that, you can make money by talking to the local bank that does not have a wealth management division. They're all looking for ways to expand their profits. And you can help them, and we can pay you a generous commission for doing it. Thank you very much.